Nolan Watson, CEO of Sandstorm Gold. Thank you so much for stopping by at the Denver Gold Forum.
Well, thank you.
It's been way too long. I know it was January, in fact, the last time we spoke.
It was, yes.
And when we spoke, you said that it was the first time in a long time, and this is January, that you felt good about the gold price and that you felt it was going higher. So, how'd you know?
Yeah, I think in our industry, getting the call right isn't hard. It's timing it right. That's the hard part. And I make the mistake of calling things early sometimes. So I've gotten a lot better at hiding what I actually feel about the gold price for at least 6 to 12 months. So that I think January was the first time I ever said it publicly what I was thinking.
So how do you feel today, September?
Yeah, I feel a little bit mixed. I think that the gold price has gone up a little bit faster than I thought it was going to. Even when I said I'm feeling good, I think gold's going up back in January, I was thinking it was going to go up a little bit slower than this. So I think all of the fundamentals are still backing it in a massive way. And I would say for the first time in my life, I'm willing to say something along the lines of 2 to 3 years from now, gold will be over $2,000 an ounce. Not it might be, it may be, it will.
Very bullish call from Nolan Watson.
But I wouldn't be surprised if we saw a bit of a pullback first, but it's going to go in the right direction.
What's the path for that? Is it because you're seeing, currencies around the world just devaluing their currencies or rush to negative interest rates? What's the drive here?
It's negative interest. It's exactly what you just said. It's a theme that everybody understands. It's negative interest rates, which is crazy, by the way. I don't know if you've ever tried to explain negative interest rates to a layperson, let alone a business person. Like, it just doesn't make sense. Lending someone money and paying them for the right to be able to lend it to them. It's crazy. And so that's going on at the same time where even at these low interest rates, for the first time we're seeing signs of trouble in debt books. So not just the big banks, but a lot of the medium tier lenders. I know some companies that are having softness in their books for the first time in a long time. And so even at these low interest rates, people are now struggling to make their debt payments. That's a really, really bad sign. And the only way you fix that is quantitative easing and printing of money and devaluation of currencies. And I don't know if it's going to take a year or 3 years, but it's going to happen.
In this run up from 1250 to 1500, how has it changed the model for gold miners? What price are they using now?
I think the average gold mining company is still using $1,250 to $1,300 gold. We're really slow to adjust to things. And having said that, I think that they're using that gold price with currency valuation assumptions also of yesterday. Meaning that, okay, so if it's $1,500, the gold mining companies, their costs are going to start going up. Like if gold is going up because dollars are being devalued, those dollars being devalued, it's going to take more of them to mine a mine. So the actual margins of mining companies, I don't think are massively up over the last couple of years.
So on that note, are they not spending yet? Are they still holding on to that cash?
Absolutely.
So not yet?
Not yet.
You still need a higher gold price?
I think we need to have other people truly buy into it, not just the CEOs of the companies, but the investors as well. I think that's one of the really interesting things for the first time in my career. What we're seeing here is the gold price is running and the generalist investors aren't rushing in. So the total amount of capital being allocated to gold mining companies around the world hasn't really gone up that much. Our share prices are up a little bit. They're not up a huge amount.
Do you think they're still in the crypto cannabis space?
No, I think that's all falling apart right now. I think realistically, and I don't want to sound trite about this, but the gold mining space is so insignificant compared to worldwide scale businesses. So your large US generalist investors, they're not going to start allocating capital to gold until they're starting to miss performance benchmarks because they're not invested in gold. And it's such a small space that you have to have really big moves in the equity prices for that to happen. So I think it's going to be when you see gold hit $18, $19, $2,000 an ounce that all the guys then start rushing in, which then creates a whole other weird scenario. But
there's actually been talk of the D word, which I haven't heard in I don't know since when, of companies perhaps paying dividends with their newfound wealth here. Are we going to see miners being more generous towards shareholders here? Obviously, dividends is not a term that's used when we're talking mining, few and far between here, but could this be a new trend?
Yeah, I think so. I think especially among CEOs who have seen the mistakes and sins of the CEOs in the past bull market, where they were just using all of their cash to acquire overvalued assets and not giving it back to shareholders. A lot of those CEOs got fired, and the new guys are coming in and they're being a lot more careful this time, and I think you're going to see a lot more wise capital allocation, including dividends. At Sandstorm, for example, we're one of the only companies right now that it's not only both growing our portfolio, but we are buying back a significant amount of our own shares. We're in the market every day. We were in the market today. We were in the market last week. We're buying back our own shares. And we think it's a smart allocation of capital. Give it back to shareholders. And if we can buy our shares below NAV, we'll do that.
Sandstorm climbing 56% in the last year, so feeling good to be Nolan Watson?
Yeah, it's feeling all right.
So what's the game plan for 2020? What's the focus here?
Yeah, so 2020 is a pretty straightforward execution year for us. We expect about, at today's gold prices, $80 million US of free cash flow. And so we're going to buy back our own shares, we're going to buy more streams and royalties, and we're going to look at paying a dividend.
Finally, Nolan, if I had to ask you to assess or give a grade to the mining sector right now on a health scale or barometer, where are we at? Do you feel good?
Yeah, I feel fantastic. I would say that that's because I'm in the gold space. I know a lot of the base metal mining companies are starting to hurt. Copper prices are coming down while costs of mining copper are going up, and so they're really getting squeezed. I don't know if we're going to get the R word or recession, but I think there could be a world of pain in the base metal mining space if we do. And so we'll see how it goes. But that creates opportunities for companies like Sandstorm to allocate capital to base metal mining companies that need to sell gold streams. And so I personally am feeling very good.
All right, Nolan Watson, thank you so much for stopping by.
Thank you.
Come by more often. And thank you for watching. We'll have much more for you on Kitco.com. Thanks.